Hello everyone and welcome to Fluent Financial's What You Should Know for the week of June 21st. My name is Mike Lanese and I'm the Portfolio Manager at Fluent Financial. This past week we saw the June Federal Reserve meeting occur with the FOMC participants decisively shifting the timing of an interest rate hike from 2024 to 2023. The latest communication from the Fed revealed that they had a lower inflation pain threshold than previously suggested. Price inflation will be kept on a short leash, and experts have even thought that possible rate hikes may occur in 2022. Stocks fell for a fourth straight day, and the S&P finished its worst week since February because of these inflation pressures pushing on stocks. For the week, the Dow Jones lost 3.5%, while the Nasdaq fell only 0.3%, and the S&P was down 1.9%. The sectors that had led the markets higher all year were the week's worst performers, with the financials and material groups each losing more than 6%, while energy lost more than 5%. Commodity prices also plunged, including a 9% drop in copper. The commodity prices are affecting the producer pricing index numbers, and these higher prices may be pushed down to the consumer and cause additional inflation hikes. Year to date, the S&P is up 10.93%, while our V&O stock portfolio is up 14.74%. For the week ahead, the United States has been added to Europe's safe country list, allowing tourism to resume across Europe. U.S. stock index futures pointed to a higher open on Monday morning, with the Dow futures up 0.8% in pre-market trading. The yield on the 10-year Treasury fell another 2 basis points to 1.43%, marking its lowest point since early March. Economic reports this week include existing and new home sales, the Purchasing Managers Index, or PMI, the Personal Consumption Expenditures, or PCE, durable goods, and the weekly jobless claim numbers. Big tech will be in the spotlight, with the U.S. House Judiciary Committee expected to vote on a package of antitrust bills. This list includes Apple, Amazon, Facebook, Google, and Microsoft, many of those names which we hold in our portfolios. In the financial sector, the Federal Reserve will release the bank stress test results. Notable earnings this week include KB Homes, Carnival Cruise Lines, FedEx, Rite Aid, Darden Restaurants, Nike, BlackBerry, and CarMax. FedEx will have to match rising investor expectations on growth and profit, while uncertainty over the impact of boycotts in China lingers over Nike. For an options update, options expired this past Friday for the June option cycle, and the stock income generated 0.96% in cash from selling 80% of the available calls. Between the option cycle dates, stock income had a return of negative 1.41% as some of its components fell, versus a return of the S&P 500 over the same period of a positive 0.25%. The Advantage portfolio has generated 0.82% during the call cycle from selling 85% of its possible calls, and had 38% of these positions called away from us. Since the May 21st expiration, the Advantage portfolio is up 1.69%, again versus the S&P up 0.25% over the same time period. As always, thank you for tuning in to What You Should Know, and have a great week.